Hello, everyone, Paul here. Today I'm going to go over kind of, now this is going to be a multiple video. The last video I went over how you can look at the Walmart stock, and we looked at the compounding site, how when you trade with Walmart and all you do is you focus on a $1 difference, where that can lead over time. So today I'm going to kind of continue on, and this is going to be more of a beginner. For those that don't know how to do it on Robinhood, I'm going to teach you guys how to set everything up on Robinhood. If you guys want to apply, if you want to try, if you want to do this, I'll teach you the 2 things you need to learn about Robinhood before you get started. And then how to set it up, how much you really need to get this going. The goal here is to look at the Walmart stock by week contracts every week. It doesn't mean you have to hold it for a week, but you do, every time you do a trade, you do have to buy a week contract. So you have to have enough for that. And there's a couple key things for that. So that's what we're going to look at today, is basically how to set it up so you can do it for yourself if you want to. Now, I'm not responsible for any profit or loss. This is just kind of a little case study that I'm doing to see my results and to kind of show the compound growth over time, basically, by trading. Now, before I begin, I want to go over why I'm choosing Walmart. And that's basically because if you look at the price, if you look at how it moves, and if you look at the weekly chart, it moves just enough in a week to usually find a dollar difference. There's other assets that are a lot more volatile, but usually with Walmart, you can usually find a dollar difference. Sometimes if you're lucky, you might find $2. But going beyond that, it's, you usually don't find any more from like $1 to $2 a week. The only thing about the one thing I like about it is, let's say like a $400 or $500, you put up that in a trade. It would take the trade to go down $4 to $5 in the opposite direction for you to lose everything. And being that it doesn't really move that much, you're less likely to lose everything, because the price would have to go $4 to $5 in the opposite direction for you to lose everything. So that's another reason, advantage level I can do this. You could do other assets out there, but you have more of a risky chance, like the S&P 500 and things like that. You have more of a risk of losing all your money, because you can go $5 in the opposite direction. So that's another thing that I haven't mentioned, that focusing on something like Walmart, it's very unlikely to lose everything in a trade, because it would have to go $4 to $5 in the opposite direction. And that's easy to spot when that happens. So anyway, I'm going to teach you guys how to set you guys up, how to load up your Robinhood account, and the 2 things that you need. We'll look at kind of the prices right now and what the prices are per week, and we'll know kind of where to kind of start with the balance to actually kind of start with, and then we'll go from there. Okay, so right now you can see my balance right now, $573. And I'm waiting for Monday to start this up. Monday I'll be looking to see if I see any signals, and I will be placing trades on Monday, which is tomorrow. With the date of recording this video, I will be putting my week contracts in. If I see the signal, I will put my trade in for tomorrow, and this will kick in tomorrow. But there's a couple things you guys need to do when you start Robinhood here. First, you want to go to your investing area. You want to go to your little icon at the bottom right corner, and you want to go to investing. So you want to come all the way down to where it says, option trading level 2. So it's not going to say level 2. you're basically, there will be a button here that you press, and that will, and you're get to sign some, sign some things, sign some documents, and it's going to say things like it's a risk, and stuff like that. That's just things you got to follow, because you can lose money being an option trader, and that's basically what it's saying. You're basically upgrading your account to a level 2. Now, you do have to have, so I think, you do have to have some kind of knowledge of trading for them to allow you to be a trader. It all depends if you get approved or not, but most people, I think, do, but it's just a risk, so you just have to know that. So once you do that, you become enabled to do option trading. You also have to upgrade your account. So for further down here, you'll see account type, and you want to switch. If you first installed Robinhood on your phone, it'll probably say margin. Now, margin basically means, I believe, when you trade, your gains are made. The gains you make from your trades. So anyway, the gains you make are made instantly. If you do a cash account, if you do a margin account, your gains are made instantly. Every trade you make, but you're only allowed a certain amount per week. And if you do any more than required amount, your account can get restricted. So you need to switch over to a cash account. What a cash account basically is when you make your gains, the funds will not be available till the next business day. And when you put money into Robinhood, you're going to have to wait a couple days for it to clear. But when you trade, you can have unlimited trades. So a cash account is the best option here. So those are the two things you need to do when you first have your Robinhood account. You need to enable options, and you need to switch to a cash account. Okay, so the next thing we want to do is we want to look at Walmart, and we want to look at how much it's going to cost. Now, at the date of this video, it is Sunday, so we'd be looking at the prices for an entire week. The prices that you see will be, and what you basically do when you want to get started here, when you have options enabled, you'll want to go to your asset. In this particular case study here, it's Walmart. So you go down here to the bottom corner, and when you want to do your trade, you're going to go down here, and you want to go to options. So the next thing you want to do is basically you want to do your contract a week out. So the date of today's video is the 22nd of June. So we basically want to do until the end of the week, the 27th. So this will be until the end of the week. This will be for a week. So we want to look at some prices here, and we're not really looking at the charts right now. I'm just going to give you guys a general idea of how much one contract would cost. So let's look at this one real quick. We're not really analyzing the charts right now, but whether it's going up or down, we're just going to be looking at prices. Right now, what I focus on is I try to get this line as close to the dot as possible. The break-even point here would be at 96.55. So to make that dollar difference, it has to go from 96.55 to 97.55. And if it goes to 97.55, you'll make $100. So you calculate that, you find a dollar difference. One contract will make you $100 for every dollar. So that's how you set it up. And that's really based on the balance. And, I can actually afford this come Monday when it starts. So if the market goes up, I can do that. But the whole goal of this is to scale up over time. What we saw with the compounding calculator is pretty much you want to use the entire balance to create a 25% and take your balance, make 25% of that, which is that's $1 difference in price. So $1 difference in price is 25%. So basically, as your balance grows, you're going to be doing this and you're just going to be increasing it. The balance is going to increase and you're just going to keep buying more contracts. So, for 2 contracts, it would cost 910, 3 contracts, 1,365. Get to 5, which is $2,275. So you get the general idea. The bigger your balance gets, the more contracts you buy, and each time you do it, you're just looking for $1 difference. So we're going to go over a couple of numbers that I've kind of figured out. So to find $1 difference, from point A to point B, $1 difference will give you about a 25% increase of whatever that balance is that you're wagering. So $1 difference is the goal, and that's the goal we want, because we did look at the numbers yesterday in the compound calculator and saw where it would lead. But if you do manage to find a $2 difference within a week, that means you'll get 50% of whatever your balance is. And anything beyond that really doesn't happen much, so I'm not going to go into that if you want to learn more. But, obviously a $3 difference will give you 75% back of your balance, and then a $4 difference will give you 100% back. But that's really unlikely to happen, or rarely to happen, when you're doing Walmart stock, because you would have to find a $3 to $4 difference in price every single week. It's more realistic in a week to find $1 to $2. So that's a goal and an expectation to be looking for